What should a bookkeeper be doing in your online business every month? That's what we're talking about in today's episode of The Profit Pillars Show. I'm your host, Parker Stevenson, CEO of Evolve Finance and author of the book Profit Pillars. And this is a question that a lot of business owners have, but I don't know if they really ask because if you're ready to hire a bookkeeper and you kind of interview a couple and you just assume whatever they say they should be doing is what they should be doing, and you just go with it. Because when it comes to the accounting side of running a business, you kind of have to rely on the expertise of the bookkeeper, the tax accountant, the whoever is working on the financial side of your business, because chances are you just probably don't have very much experience with it unless you were a bookkeeper or an accountant in another life, which is going to be a very select few people that are in that position. So in today's episode, I really want to clarify, what should a bookkeeper be doing in your business? What does that flow look like on a monthly basis? So that way you can better understand what your bookkeeper should be doing, hold them accountable, and really get an understanding for, are they doing the quality work that your business deserves to have? And if you are doing your own bookkeeping and you're using a spreadsheet, because again, I do not recommend doing your own bookkeeping for your own business in bookkeeping software, you're probably going to mess it up more so than if you just did it in a spreadsheet. Then this episode will probably help you to understand what your flow should be on a monthly basis and what your goal of doing your bookkeeping in your spreadsheet should be. And as a reminder, we do have a bookkeeping spreadsheet for purchase on our website at evolvefinance.com if you're interested in seeing how our spreadsheet works and using the Profit Pillar system to boot. So let's start here. What's the first thing your bookkeeper is going to be doing every month as part of their process? What's the first step? Well, the first step is to actually download all of the financial transactions from all your financial accounts into your bookkeeping software. Now, that typically takes the form of connecting bank accounts, credit cards, and any other financial account that you can to your bookkeeping software. And so you plug in the logins for your financial accounts in QuickBooks, and it automatically starts downloading it. So that part is fairly easy, but I do think it's important to understand that just because the banks are connected doesn't mean it's downloading properly. We'll talk more about that in just a second. But also there are some financial accounts that just don't really connect to QuickBooks very well. For instance, PayPal has been a nightmare for like a decade. Just the way it downloads transactions is super confusing and hard to deal with. And so at Evolve Finance, we built our own process around that so that it's accurate and done properly. But there are certain accounts, maybe other merchant accounts, sales softwares where you may not want to connect it to QuickBooks. And it's really important that your bookkeeper understands which financial accounts make sense to do so versus which financial accounts you maybe needs a more manual process. Now, once they download the transactions into your bookkeeping software, then they need to categorize the data. That's step 2. So they literally should be going through every single transaction from all your financial accounts and deciding which category should this be going into. Now, most of those categories are going to be on what's called your profit and loss statement. That's the main financial report every business owner needs to be looking at to see how much revenue is coming in, how much have we spent on expenses, and what's our profitability, all for any given period of time. You can do it for the last month, the last quarter, the last year. There's a bunch of different ways you can kind of break up the timing of how you want a profit and loss statement to look. But ultimately, this is your report to see if you're profitable. And if you've read Profit Pillars or heard me talk, running a profitable business is really important. And that's where a lot of business owners think, well, you're downloading the transactions directly to your bookkeeping software. It happens automatically. How hard is it to categorize? Can't AI do that? Well, number one, no, AI is really bad at categorizing things. You still need a human component here because there's still a lot of opinion around what should your categories be. The way most bookkeepers are going to categorize transactions, we wouldn't do it that way at Evolve Finance because we use specific categories that make sense for online businesses or modern small businesses. So the business owners can actually understand what the heck their expenses are, that those categories make sense to them when they look at them. So there are definitely ways a bookkeeper can use their bookkeeping software to make rules and automations that automatically put transactions into specific income and expense categories or categories on the balance sheet. But ultimately, you need a person that understands your business model, has a clear perspective on the types of categories that they should be using for your business, and then figuring out, is this a transaction that should be automated every month that we can automatically put in or have QuickBooks just accept every month? But even then, you still need your bookkeeper looking over this stuff because, for instance, 1 month you may go to Target and you accidentally use a business card for a personal transaction. So your bookkeeper goes, hey, looks like you got Target. I put it under office supplies. And it's like, well, no, that wasn't office supplies. That was a personal transaction. My bad. Please put that into profit distribution. Well, if your AI software or whatever, or your very cheap bookkeeper who's rushing through things just goes, okay, I'm going to just put that in profit distribution going forward. Well, the next time you go to Target, you might actually be buying office supplies. And if you don't have a bookkeeper paying attention, they may put those office supplies into profit distribution, and now you're not going to get the tax write-off. You're going to miss out on that write-off. So that's where there's so much nuance in terms of the categorization. I mean, profit pillars aside, like we have a very clear and strategic way we organize our clients' transactions at Evolve Finance using the profit pillar system, which is fairly unique. But even if you're working with a bookkeeper who doesn't have as clear of a perspective on bookkeeping as we do, it's still important that they're paying attention to how they're categorizing your transactions, because if they're putting things in random categories that don't make sense to you, or they're inconsistent, where they're putting transactions into software one day, then marketing another day, and in something another category another day, then you're not going to really be able to utilize your financial reports to help you understand what the heck are you spending money on in your business? Like, what are you actually doing in your business? And that's the part where I think a lot of business owners commoditize the idea of categorization. Every bookkeeper is going to do it the same, and they're going to use the same attention to detail. But if you're an experienced business owner and you've worked with multiple bookkeepers, then you get it, that like it's a battle sometimes to get your bookkeeper to put things in the right categories and remember what you told them. And it just can be an uphill battle that's not very fun, especially if you're paying budget prices hoping for a high quality bookkeeping experience. So do not underestimate the categorization process. Also understand that as the business owner, your bookkeeper should be asking you questions about transactions. Where should this go, business owner? I'm not sure where to put this. I'm not sure what you spent money on. What is this expense for, business owner? They should be asking you those questions. And if they're not, then they're guessing. They're simply looking at the transactions, guessing, and throwing things wherever they think they're going to be. And not only can that have an effect on your tax return, it's going to have an effect on your confidence around, can I actually make big financial decisions with the financial data that I'm being presented with? So I think that's an important thing to think about. Now, once the transactions are downloaded into the bookkeeping software, those transactions have been categorized either into income categories, expense categories, or balance sheet categories. Now the data needs to be reconciled. And what reconciliation means is it's the process of making sure that all the transactions that happened in your business and in all your business financial accounts are exactly the same and showing up exactly the same way in your bookkeeping software. So in essence, there's no duplicate transactions or missing transactions. Again, you might be going, Parker, it's software. The software automatically downloads it. The bookkeeping software is automatically going to download it. Shouldn't it all be reconciled and perfect? Nope. I can tell you, with over a decade of experience doing this and managing a team that does this, there are issues that happen all the time with bank feeds. There's issues with the bookkeeping software from time to time where it's not downloading things properly. Sometimes it can miss a whole chunk of transactions due to a glitch and systems being down. So it's really important that your bookkeeper is going through a full reconciliation process. This is something AI is not good at doing yet. You do not want AI reconciling your accounts. They're not going to understand the nuance of figuring out, well, the ending balance in the bookkeeping software is not matching the ending balance on the credit card statement. What's missing? What's going on? What do I need to go fix? Now, here's the reality. The reconciliation process is a pain in the butt. Most bookkeepers and accountants don't want to deal with it. If you have a month where all your accounts match up perfectly, there was no issues with downloads, and everything reconciles fine, awesome. That's great. It does happen, but it doesn't happen as much as maybe I know we would like it to happen with our bookkeeping team, because again, technology is technology. And so what happens is, if let's say the balances are off, well, what the bookkeeper has to do is they have to go in now and figure out, okay, why is the credit card off? Where's the missing transaction? Where's the duplicate transaction? What is happening in the bookkeeping software that is not matching up with what happened on the credit card statement? And sometimes that means scanning through the statement and the transactions in the bookkeeping software to see what's missing or what's duplicated. And that's a tedious process, but it's an important process. And what a lot of bookkeepers will do is they'll make an adjusting entry and they go, it's only $50. It's only $100. I'm just going to put in a journal entry to correct it. I'm not actually going to go find it so I can make sure that all the categorization is 100% accurate. I'm just going to make an adjusting entry and move on. But the problem with this is not only does it affect potentially what you get to write off through your business, not only does it put into question how much you can really trust the full accuracy of your data, the more your bookkeeper does that on a given month and is just adding another journal entry, journal entry, that adds up. And you don't know how big of a journal entry your bookkeeper is willing to make. Is it a couple dollars, or are they willing to do it for a couple $1,000 because you're not paying them enough? They're a budget bookkeeper. They're not interested in really delivering a detail-oriented experience, which bookkeeping accounting is all about attention to detail. That's how you sleep better at night, knowing that your accounting team, and whatever capacity they're functioning in your business, is paying attention to those details. That's why not everyone's an accountant and a bookkeeper, because you need a keen attention to detail. You need to be very process oriented so you can fix little issues like that. Bookkeeping is a puzzle every single month. I don't care how big or how small your business is. There's always going to be a little problem you got to solve, especially when you're using bookkeeping software. So reconciliation is really important. It makes your books audit proof. If the IRS ever looked over your books and they see everything's reconciled to the penny every single month, then they know there's not going to be any funny business going on. Because when accounts aren't reconciled, that's when you can start manipulating numbers, and that's going to throw up red flags for the IRS. So do not take reconciliation lightly. Do not let a bookkeeper tell you that it's not important, or that it's okay to make adjusting entries, or that their AI software is going to take care of it. You need a human looking over the reconciliation process to ensure accuracy and to deal with the nuance when things don't go well. Now, once the data has been reconciled, the next step is a step not every bookkeeper is going to do, but we do at Evolve Finance because we think it's important. And again, Corey and I built Evolve Finance to be an accounting firm that delivers the quality accounting experience we would want for our own business. Not all bookkeepers think that. Sometimes they're just going, you know what, I'm just going to get the bare minimum done so we can file taxes. But the bare minimum can still have an impact on your taxes if they're not doing it right. So one of the first things that's just a no-brainer is your bookkeeper making a payroll adjustment every month? If you're running payroll for your business, whether it's just you for S-Corp purposes or it's for a team of people, yourself and your employees, there are adjusting entries that need to be made for payroll tax and for benefits payable. So these are things that actually affect the balance sheet. There needs to be, your bookkeeper needs to be going in to the payroll software and looking up what the full amount was paid, what was held for taxes, what was held for benefits, and make adjusting entries in your bookkeeping software. Again, this isn't something AI can really do. It's something that You need an experienced bookkeeper who understands how money flows through payroll, how benefits flow through your payroll and shows up on your books. And again, this can have an impact on your tax returns and how much you're writing off for certain expenses and how easy it's going to be for your accountant to file your taxes properly. So again, a lot of bookkeepers go, well, business owner probably doesn't know what's going on here. They're paying me $150 a month. Who cares? I'm just going to accept the payroll transaction and not make any adjustments. So that's an important thing to ask your bookkeeper about. Are they making monthly adjusting payroll entries to account for payroll taxes and benefits? Now, the other things that they should be doing are adjusting merchant account transactions. So, for instance, with Stripe, by the time you get a deposit into your bank account from Stripe, they've already removed refunds and they've already removed merchant fees. So you're just getting the net amount in your bank account. The actual full amount of your sales is happening in Stripe, and then they're taking out merchant fees, they're dealing with refunds. So by the time it hits your bank account, you're just seeing the net amount. But it's really important to the IRS that you are accurately representing your income. So if you, let's say, have made $1,000 in Stripe, but only, let's say, $900 hits your bank account, well, what your bookkeeper needs to do is make sure the $1,000 is showing up on the books, and then that other $100 is showing up in refunds or merchant fees or whatever's going on there. Because this is helpful for two reasons. Number one, we want to accurately represent your income to the IRS when you file your taxes, but also it's important to keep track of how much are you giving Stripe each month in merchant fees? What is your refund rate? How much are you giving away in refunds to customers every month? So if your bookkeeper is not accounting for that, that just shows either a lack of attention to detail or a lack of understanding around how a merchant account works and how it should be represented on the books. Now, the last thing that I think a bookkeeper should be doing, but I don't think all bookkeepers will know how to do this, is separating your revenue by offer. Now, if your business only does invoicing, then it's pretty easy to have income categories based on what you're invoicing your clients for, assuming all the invoicing is happening in your bookkeeping software. But for the majority of the businesses we work with, they're receiving their money through merchant accounts, again, like Stripe. They're receiving money through PayPal. They're receiving money through Square, where ultimately all they see in their bank account is, here's a big deposit from Square. Here's a big deposit from PayPal. Here's a big deposit from Stripe. So you have no idea really what that money was for or who it was from. So what's important, or at least we feel is important for business owners, is to know, all right, how much have I sold across all my different offers? Now, as a business owner, you can go look that up in your sales software. If you're using something like Kajabi, you could go in, run a report in Kajabi and go, cool, here's where all my money came from. Or if you're using something like Shopify, right, you can go in and run a Shopify report. But if your bookkeeper knows what they're doing, they can go into your sales software or maybe even go into your merchant accounts if it makes sense and separate all of those deposits, separate your income. So instead of it all saying sales, it says the different offer families that you have. So you can see how much revenue are you generating from the various offers in your business. And whether it's in your QuickBooks account or you have separate sales reports that you run internally, it's really important to know this information so you can know, like, are we spending money? Are we spending time on selling the right offers? Where should we spend? Do we need to make a new offer? Do we need to cut back on our offers and focus on our main ones? These are questions these are conversations I've had over and over again over the years with our clients, and they're really crucial conversations. And so if you're just seeing a sales category, maybe that's fine. Maybe you don't need to see your revenue broken down on your P&L, but I know so many business owners aren't tracking their revenue by offer. So if your bookkeeper can do it for you, that's huge. But again, a lot of bookkeepers don't do that because they aren't maybe well-versed enough in your sales software to know how to run a report, run a pivot table through the data, and represented on your P&L accurately. But it's something we've been doing for over a decade at Evolve Finance, and it's one of the reasons why our clients like to work with us. So these are the things that a good bookkeeper, an experienced bookkeeper is going to know how to do. Again, make your payroll adjustments if you're running payroll, make your merchant account adjustments if you're using merchant accounts, and separating your revenue by offer if you're using sales software that allows you to make that separation. Now, from there, your book should be done. Everything's been downloaded, categorized, reconciled, and some of these extra adjusting entries have been made. The next thing your bookkeeper should be doing is sending your financial reports. And I know a lot of bookkeepers will just be like, file's done, go into QuickBooks, look it up. And if that's what you want, that's fine. If you like going into QuickBooks and looking it up, that's cool. But especially in today's day and age with how many online business owners just have had no one walk them through a P&L or help them understand how to look at a financial report, I don't think that's enough. Out of All Finance, we do actually send our clients a financial dashboard every month. It includes some custom reports and visualizations, especially using our Profit Pillars framework to help our clients analyze and understand where their money is going to better. But then we also have their normal sort of financial reports and P&Ls ready for them to look at without having to log into QuickBooks to add an extra level of convenience for our clients and also make it easy for them to copy and paste the data if they're using budgets or running numbers in other ways. It makes the data really accessible to the client. So this is something that, again, if you're working with a budget bookkeeper, you can only expect so much. But if you are paying a little more and you're trying to get a great experience, the way that your bookkeeper delivers financial reports to you and visualizes the data to you is really important, especially as small business owners. We can't afford CFOs or full-time financial analysts that are crunching the numbers in a bunch of different ways and presenting it to you as the business owner in a super digestible way. Your bookkeeper kind of has to take that role. And if they don't see their role as being such, then you're going to be missing out a little bit. Now, there are questions around, well, should my bookkeeper be doing more than just managing the books? Should they be managing my payroll? Should they be paying bills for my business? Should they be sending invoices? And this is something we've talked about before in other episodes. If that's what you want, that's fine. I get the convenience of having all of that being managed by your bookkeeper. But where my concerns lie and where our team's concerns lie, like this is our whole perspective out of All Finance, is if your bookkeeper's spending time having to do payroll, having to pay bills, having to send invoices, then that's time they're taking away from making sure your books are accurate. And at the end of the day, the most important function of a bookkeeper is to ensure that your books are as accurate as possible and that they're ready to go for your accountant and that they're providing insights, financial insights to you as the business owner. And given, everything that I've just explained to you, there's a lot of expertise that needs to be had just in the monthly bookkeeping process. So if they're also going, oh yeah, we'll do payroll and we'll do all this other stuff, and it's the same person doing that work, you're essentially gaining convenience, but likely going to be sacrificing quality of the bookkeeping. Now, all this is dependent on how complex your bookkeeping is and how big your business is and all of that. But the way we look at it at Evolve Finance is whatever financial functions that do not take financial expertise and are more just administrative in nature, right? They're things that you don't need some strong financial background to do. You just need a good administrator, whether you are the administrator or someone else on your team is the administrator. But paying bills, like most bills, are going to be set up on recurring payments, right? When you pay for your software. Or if you're paying a contractor, then you're going into PayPal and sending out the payment. There's no financial knowledge there. It's just an administrative task. Doesn't mean it's not an important task, but you're probably going to be able to pay an administrative person less money to do those things. Plus, these are the types of tasks where they're going to be happening throughout the entire month. And so having someone who's involved in your business on the back end to send out invoices, to pay bills, to click the button in Gusto to get payroll to go, these are internal processes that you and your team are going to want to learn and to outsource to your bookkeeper or accounting firm chances are they're going to charge you more money to do it than someone on your team. And then you're always going to be reliant on someone outside of your business to handle things that are daily or weekly operational processes that honestly will just be more efficient and cost less money to do them internally. So if you are going to outsource this stuff to your accounting firm, I think it's important that whoever's doing it is not also your bookkeeper, who's not also your tax accountant, because a tax accountant should be spending all their time learning and understanding how to save their clients as much money on taxes as possible and having conversations with their clients about saving them as much money on taxes as possible. And your bookkeeper should be doing the same thing. They should be spending all their time making sure their clients' books are as accurate as possible, that they're thinking about how do we present this data to our clients as well as possible, answering client questions, helping them to understand their numbers, that when they're doing all this other administrative work, it's taking them away from from truly being experts in their financial careers that will most benefit you and your business. So that's why if you're going to work with an accounting firm and they do offer payroll, invoicing, bill pay, fine. I just don't think it should be the same person that's doing your taxes or doing your bookkeeping. So that's the monthly bookkeeping process. The only other question here is sometimes people will ask, well, should my bookkeeper be doing weekly bookkeeping? Should they be updating it every day? No, I don't think so. The vast majority of our clients run very successful businesses, especially as an online business owner. To be paying for weekly or monthly bookkeeping, weekly or daily, even daily bookkeeping, you're not really getting reconciliation. It just means they're going to be accepting transactions, but you're not going to be able to trust if that data is accurate. You're not going to trust that they're making the adjustments. So you're essentially going to be paying a bunch of extra money for more regular bookkeeping, and you're not going to be able to fully trust it. And usually there's not a need to do that. There's not enough urgency around your cash flow to demand daily or weekly bookkeeping. And if you're looking for daily or weekly bookkeeping, it's usually a sign that you or I guess maybe not just you, as a business owner, your business is lacking the ability to plan ahead. You don't have a forecast and budget or even some basic spreadsheet to help you kind of figure out how much money do we need to generate every month? How much money can we spend every month to make sure we're not going over on anything? It sounds like we need some accountability and some more financial systems in place so we have a better roadmap for how money is moving in and out of the business. So if you want weekly bookkeeping as a business owner, that's totally fine. You do you, but you're going to be paying way more for your bookkeeping. The bookkeeping on that weekly basis is not going to be fully reconciled. It's not going to be fully trustworthy until the end of the month anyways. And again, usually if you're looking for weekly bookkeeping, there's some other problem in your business or something about your financial visibility that you need to get fixed. And it feels like weekly bookkeeping is going to fix that. But a lot of the times that's just not going to be the case. It's not always as helpful as the business owner thinks it's going to be. So that's bookkeeping. That's the monthly process. That's what you should be expecting. If you heard any of this and you're like, my bookkeeper's not doing some of this stuff, then sounds like it's time to have a conversation or consider working with a different bookkeeper. But just remember, you get what you pay for. If you're looking for the cheapest bookkeeper you can find, then you are going to get a cheap bookkeeping experience in return. So if you're looking to up level your bookkeeping team or your accounting team as a whole, please go to evolvefinance.com, check us out. And if you are doing your own bookkeeping and it's tedious and you want something, a better tool to do your bookkeeping while your business is small, you can also go to evolvefinance.com and check out our bookkeeping spreadsheet. But as always, thank you so much for listening to the show, and I'll see you next episode.